Welcome back to the Beautiful Minds. This is week 33, and this week's story is bigger than the stock that ranked number 1. The real story is how a screen produced 4 clean finalists, but our portfolio rules lead us to buy only 2. We deployed 10,286 rupees, and this is real money journey now covers 10 tracked weeks. This is long-term investing, analysis first, execution second, and patience after that. Before we begin, please remember that this video is educational only. It is not financial advice. I am not asking you to copy my trades, and you should do your own research before making any investment decisions. Here is the week 33 decision in one frame. The model produced 15 allied buys. 4 become the final clean shortlist. Cupid, Kalyan Jewellers, Eicher Motors and Titan Company, but the orders were placed only in Cupid and Kalyan. That distinction matters. A score creates a research shortlist. The portfolio decides the buy. We also consider existing exposure, entry condition, valuation, risk, and whether adding another rupee genuinely improves the portfolio or simply makes it more concentrated. In this video, we will go from the screen to the decision. First, I will explain the Beautiful Minds model in plain language. Then we will review all 15 week 33 stocks. After that, we will spend most of our time on the final 4 with deeper analysis of Cupid and Kalyan. Finally, we will connect the weekly decision to the full portfolio. What we already own, what we deliberately did not add, and what the updated track says after 10 weeks. The screen starts wide and the decisions ends narrow. The final week 33 analysis cover more than 5000 BST listed stocks and score more than 30 parameters. From that universe, 15 allied buys emerge and 4 pass the clean list requirement for our final comparison. For this episode, company metrics come from the final master analysis sheet, while portfolio totals come from the updated investment tracker. That source hierarchy matters because price moves and different recordings can show different snapshots. When there is a mismatch, we use the final tracker for the portfolio numbers. The Beautiful Mind model is deliberately multi-pillar. We are not asking one ratio to do the entire job. Fundamental tells us what the business look like. Shareholding gives us context on promoter, fill and deal participation. Cash flow test whether report profits are supported by cash. ROE and ROCE test capital efficiency. The balance sheet test resilience through debit and asset strength. Growth and the pros and cons layer add the final business quality and risk context. Technicals then act as a timing and confirmation layer, not a replacement for business analysis. The final score is useful because it forces us to combine evidence instead of becoming emotional attached to one attractive chart or one impressive ratio. This is the full week 33 elite list ranked by enhanced master score. Cupid leads at 274, Kalyan Jewellers follows at 269, Eicher Motor is third at 260, TAL Tech fourth at 250. Titan is 5th at 246. Then we have Hindustan Copper at 239. Minda at 238. Bajaj Auto at 237. Bansal Roofing Products at 236. Bharat Seeds at 233. KDDL at 231. Varroc Engineering at 231. Sona BLW at 230. Gabriel India at 229 and Dr. Lal Path Labs at 229. A high score does not automatically means a purchase. This list is a research output, not a promise, a target or recommendation. We still test every candidate against the clean status, entry condition, valuation, and our existing holding. The final comparison is Cupid, Kalyan, Eicher, and Titan. All 4 finalists are clean. Cupid has the highest score at 274, Kalyan is second at 269, Eicher is at 260 and Titan is at 246. On a scorecard, all 4 look investable, but the portfolio question is different. Which 2 are the best next use for the week's limited capital? That is where existing exposure, position size, and entry discipline enter the conversation. Clean status is necessary, it's not sufficient. This is the central lesson of week 33. We did not buy all 4 clean finalists because investing is not a competition to collect records. Cupid received 60% because it combined the highest enhancer score with strong technical confirmation, zero debit in model output, and a very high ROCE. Kalyan received 40% because it ranked second, remained clean, and adding to an existing thesis was more useful than opening another new position. Titan was held because the portfolio already had 2 lots. Eicher was held because 1 lot already exists and the current price did not create a compelling new entry. Saying not this week is not indecision, it is part of process. Cupid is the week 33 change pick because it combined the highest enhanced master score in the final output with strong technical confirmation. The business sits in personal care and medical device. The model reports ROE of about 42.9% and ROCE of about 33% along with strong recent growth. But the risk is equal important. RSI is 78.6 and the PE is very high. The stock has already moved strongly, so the thesis is not buy at any price. The thesis is accumulate carefully, accept volatility, and keep the position sized so that excitement does not make the decision for us. A great score can identify an opportunity. It cannot remove valuation risk. The technical picture is constructive. The model reports a bullish super trend, a golden cross, price above the 200-day moving average, and a strong buy signal. But a strong chart does not arise an extended price. An RSI above 78 says momentum is powerful and also says chasing can be expensive. The disciplined interpretation is to use planned accumulation range rather than tuning a weekly buy into a one-time all-in decision. For a long-term investors, the key risk is not one red candle. It is whether future growth, cash generation, and return ratios continue to support the valuation. Technical indicators are timing inputs, not guarantees. It is whether future growth, cash generation, and return ratio continue to support the valuation. Technical indicators are the timing inputs, not guarantees. Kalyan is the second ranked final pick at an enhanced master score of 269. The model shows a large cap jewelry business with ROE above 31%, ROCE around 24%, and a strong multi-year sales and profit growth. Promoter holding is shown as increasing, deal holding is buying, and operating cash flow is improving. The business thesis is brand expansion across India and Middle East, supported by franchise lead model and continued jewelry demand. The watch items are valuation and debit. P is around 43.9 times and debit to equity is showing at 0.53. These do not automatically invalidate the thesis, but they make disciplined accumulation more important than excitement. Kalyan was not a complete new idea in this portfolio. It was an average down decision with an existing thesis. The technical output shows RSI 65.4, ADX 37.9, a bullish super trend, a golden cross, and price above the 200-day moving average. That is more structured entry step than buying simply because the stock is popular. The actual order was 7 shares at 602 rupees for 4214 rupees. The plan is SIP style, adding only when price and these both make sense rather than forcing them full budget into one day. Averaging down is not automatically rational. It is rational only when the thesis remains intact and the position size remain controlled. Titan and Eicher are not bad stock in this analysis. Titan scored 246 and showed a strong technical profile and high ROE. Eicher scored 260 with zero debit in the model output. Strong ROCE and a prelimination thesis. The decision was about portfolio context. We already held 2 Titan lots and 1 Eicher lot. When capital is limited to roughly 10,000 rupees per week, adding to a good existing position can be less useful than strengthening the portfolio's balance. A hold is still decision. Good company, no new capital today is a valid investing sentence. The execution was straightforward. Cupid 22 shares at 276 rupees, total 6072 rupees. Kalyan 7 shares at 602 rupees, total 4214 rupees. Combined deployment was 10,286 rupees. Both were BSc limit orders with day validity and CNC delivery. The reason to show execution is accountability. This is what was actually placed. It is not a claim that either price will rise, and it is not an instruction for everyone else to copy. The decision process and the order record are separate from the future outcome. Now we zoom out. The updated investment tracker shows 99,678 rupees and 50 paisa invested. Current portfolio value is 1,12,988 rupees and 80 paisa. Total profit and loss is 13,310 rupees and 30 paisa. The reported overall return is 13.35% across 10 tracked weeks and 24 holdings. Weekly returns are uneven. The best week was week 24 at 32.86%, while week 32 was negative 4.45%. That unevenness is normal in a portfolio. The discipline is continuing the process without changing the rules. Whenever the color turns red, these are tracked figures at the stated snapshot, and portfolio values will change with the market. The portfolio is not an empty page. The tracker shows meaningful exposure to gems and jewelries at about 24%, IT software at about 20.5%, and auto components at about 12.7%. That is why the weekly decision cannot be made from a ranking table alone. Kalyan adds to an existing jewelry thesis, but Titan was not added because the portfolio already held 2 lots. Cupid adds a personal care exposure, which changes the sector mix. Portfolio construction is not about avoiding every overlap. It is about knowing when overlap becomes concentration. The learning loop keeps the channel honest. Cupid is the strongest individual position in the tracker at roughly 80.92%. Reddington is also a major positive contributor at 54.71%, and Aegis Logistics is one of the strongest holding at 32.86%. On the other side, BSE is down about 17.68%. The lesson is not that the model wins every time. The lesson is that a red position should trigger a thesis review. It should not automatically trigger another purchase. Patience is not passive. It is a decision to wait for evidence. Looking ahead, it remains an accumulation candidate only. If the business evidence continues to support the valuation, Kalyan remains a SIP style idea where entry discipline matters. Sexsoft has a high score in the portfolio records, but it is already an overweighted position, so we monitor rather than chase. BSE is a waiting situation. A loss is not a buy signal by itself. The next week we'll use the same framework, screen widely, buy selectively, and track transparently. No fixed target is a promise. Every thesis must earn its place again as a new data arrives. That is the week 33 deep dive. We screened widely, selected 4 clean finalists, bought 2 and deliberately held 2. The tracker now shows 10 weeks of real money, 24 holding and a reported overall return of 13.35%. The number will move. The process is what we are building. If this transparent long-term investment journey adds value, please like the video, subscribe to the Beautiful Minds, and comment with the stock you would have chosen and your reason. This content is educational only. It is not SEBI registered investment advice. Stock market carry risk. Fast performance does not guarantee future returns. Please do your own research and consult a SEBI registered financial advisor before making any investment decision.